Hey guys, welcome to another episode of the Ultimate Edge webinar series. I'm Brittany Wortham and I'm filling in for John Murphy today. And today on our call, we have Glen Smart, who is part of our reverse mortgage division here at Bay Equity. And today we're going to be continuing on with our mini series. This is part 3, and Glen's going to go over the basic do's and don'ts of a reverse mortgage. So thanks for being with us, Glen.
Thank you, Brittany. I appreciate it. And thank you for joining us. It's always nice to be able to share the message about reverse mortgage. And for those that don't know, just a very quick overview. There are different types of reverse mortgages in the marketplace. There is the HUD insured program. It's insured by the Department of Housing and Urban Development. For that, everybody on the loan must be 62 years of age or older. There's also a private or proprietary reverse mortgage that has cheaper costs and can make more money available in some cases and has minimum age less than 62 in many states. It is state by state specific, so we want to be careful with that. We offer both, and it's important to understand how they both work. That in a nutshell is the reverse mortgage. We're going to use the age of the younger borrower, the value of the property, and a third factor to figure out how much money the senior can get. At closing, we'll pay off any mortgages that they have, which eliminates the current principal and interest part of their payment. Okay, senior will continue to own the house, so they'll be responsible for paying their taxes and insurance, but we're going to eliminate their current monthly mortgage payment and then make additional cash available to them and use it in any number of ways. So that's the reverse mortgage. Never have to make that monthly mortgage payment. So interest on the loan is accruing. It's building over time. Hopefully the value is as well. And we find that people that take the reverse mortgage will leave a larger legacy to their heirs than those that don't, which might be counterintuitive. It's a bit of a surprise. So we wanted to chat about the do's and the don'ts today. And gosh, there's so many of both of those. I've narrowed it down a bit. Under the do's column, the thing that I suggest most of all is to learn about the program. Have a chat with us. Give us a call. I'm a certified reverse mortgage professional. There are just over 200 of us nationwide that specialize and we're certified in reverse mortgage that way. We're here to educate and to show you how the program would work based on your criteria. The internet is kind of a dangerous place. It's a great way to find old information or misleading information. So I suggest that you contact us. We'll share with you materials from the Department of Housing and Urban Development, from the National Council on Aging. They're good third-party advocates for the program that can give you a high-level overview of how the program works. I would caution about talking to friends and neighbors too much and relying upon that advice, because here's what I can tell you. There are people that tell me that they love reverse mortgage for all of these reasons. And there are people that tell me that they hate reverse mortgage for all of these reasons. And they're both wrong. You know, the truth about the program is somewhere in the middle. And we want to make sure that we have the facts so that you make decisions based on those facts. And we can share with you illustrations that are customized to your situation. You can see if it's a great decision. What we don't want to have you do is assume that you don't need to take a reverse mortgage today. I don't need it today. I'm going to wait to take it. Because one of the little known features about a reverse mortgage is that it contains a line of credit option. You can leave the money available to draw later. And any money that you don't take grows in value. So if you don't take the amount that is available today, you'll have more to take later. So one of the strategies is to take the reverse mortgage earlier in retirement and then sit on it because it grows over time. And if you do that, you'll have much, much more available than if you waited until later when you were out of money to draw the reverse mortgage. It's not a loan of last resort. We have people that are using it as a financial planning tool. They're backstopping their retirements and their investments with access to the reverse mortgage funds. So fantastic program that way. I would encourage folks to explore the program and take advantage of HUD's third-party counseling services. There's a third-party counselor that can help understand the program. We're going to do that. We're going to share a roster of counselors, but they'll go through and make sure that you have a grasp of the program that's available and share with you any other programs in your marketplace that might be there to serve seniors. because sometimes that's better than taking the reverse mortgage altogether. And we're going to share with you some of those resources. I would caution you against taking money out or taking a new line of credit or borrowing new debt instead of using the reverse mortgage, because you might be affecting your ability to qualify for the reverse mortgage down the road. So a lot of do's and don'ts, but it really starts with getting information about the program. And as I said, we're happy to share that with you. We're happy to give you these materials from HUD and from the National Council on Aging, and then also customized illustrations to fit your goals. Those are the do's and don'ts. That's what I would tell you about the HUD insured reverse mortgage. But I will tell you that about half of the people that contact us are not the seniors. They're the adult children of the seniors. They're the adult children of seniors who are planning their own retirement and never planned on paying for mom and dad's retirement, right? And now they're paying the energy bill, the medications, family members are splitting up different bills for mom and dad. And this is a way to make mom and dad independent so they don't have to rely upon the children. So that their children don't have to use after-tax dollars to provide for mom and dad's care. If you've priced out in-home healthcare lately, it's incredibly expensive. And families who are using after-tax dollars to do that are just getting crushed financially. And now there's an ability to use the reverse mortgage to fund that ongoing care for mom and dad. What question do you have about reverse mortgage?
Let's see here. I don't have any questions right now in the chat box. If anybody has a question, go ahead and put that in there. And those of you that are going to be watching this playback on YouTube, you can put your comments down and we will get those funneled through with Glen. And questions that you do have, those you won't directly be in contact with Glen, but you can go ahead and contact John Murphy, which his contact will be played on here. But you can contact him or I, and we can help get those questions directed to Glen for you. Yeah, I think the big thing that I find interesting, Glen, is the kids are the ones that are going, how does this work for me and my parents?
Our oldest client to date was 100 years old.
Man.
And she was running out of money. And her son has been providing support for mom ongoing. He himself is 78. Right. And he just wanted to be able to access money so mom could live out her life at home. And, it is not uncommon for us to do reverse mortgages for the senior and their children separately.
Okay.
Right.
Yeah.
It's a great tool for many, many folks. I know my folks have a reverse mortgage.
Okay. And it's working out well.
They haven't made a monthly mortgage payment in 17 years.
That's awesome.
And for me, what's important is I haven't had to write a check to support their retirement in 17 years.
Yeah.
It's been perfect for us.
That's awesome.
All right. I appreciate allowing me to speak with you and your folks today. If there's anything I can do to share more information or answers, like I said, this is the third part in a series. So we did cover some of the other uses of the program. We talked about the overall qualifications of the program. Happy to explore any of that as folks want to hear more.
Yeah, absolutely. Thanks, Glen. Really appreciate you being here.
Thanks.
Thank you. Have a great day. Bye-bye.